Hey traders, welcome to Charts, and you guessed it. Although maybe one of these days we'll shake it up and we'll do some charts and tea. But welcome to Charts and Coffee. Yep, doing a little iced coffee. It's starting to get warm in Florida again. Hope everyone is doing great. As always, thanks for taking time out in your morning for our simpler pregame show. All right, so you'll notice I'm right here on the Forex Factory calendar, because the first thing, either the night before or the morning of, before the bell rings preferably, we want to know what kind of economic events are slated to move the market, volatility, attention, the kind of events that are A, scheduled, and B, are going to affect our watch list or our open trades. I call them hot zones because that is where, see the little icon right there? The red icon next to each one of these early on will make it really easy to understand which ones are more anticipated to move the market. Now, I would have put a bright red next to this FOMC member Bullard speaking, and really next to Meester as well. 11 a.m. Eastern, 5 p.m. Eastern. These are both voting members this year, 2022, on the FOMC. So they are important chuckleheads to keep an eye on. That's what the C in FOMC stands for, in case you didn't know. So remember what happened last time Bullard spoke. Be ready, 11 a.m. It's also going to coincide with the wind down of the European market. So it shan't be boring. So that's what we've got going on. I do have exposure, as do many of you, to the long trade in natty gas. 10:30 a.m. hot zone for that NG or UNG ETF or futures contract. All right, so with that being said, let's go ahead and jump into, as always, what our show is all about, and that is your question. So let's go ahead and jump in. And first up, Warwick, how are you? Warwick, is always great to leave a thank you comment. Warwick, I see them every day. You are absolutely a gentleman. I do appreciate that. All right. So when trading S&P, I have mentioned I only trade ES. Well, it's not that I only trade ES. It's not that I only trade ES. It's that if I'm going to trade, and I do prefer to trade ES, it's that if I am going to trade SPY or SPX, I would just prefer to go about it in the ES. So if you want to trade SPX, cool. If you want to trade SPY, cool. I've just always traded the futures, and if you're looking to take advantage of the tax benefit, well, futures are pretty good too, 60-40 treatment. I think also, again, I will root the trade in SPY or SPX in what's happening on the futures contract, because it's more of a 24-hour market, really good liquidity, so that's where I'll look for the important levels. But then this is what I'd call choose your own adventure work. What I'll do is, if there's a level on the ES that I want to trade, hey, by the way, we've traded right up into the downward pressure of the 21 and 13 propulsion dots. So we don't have a downtrend quite yet in the ES. It's still just hanging on barely to a choppy distribution market as it hovers just barely above the 200 propulsion. By the way, when you hear me say propulsion, this is just a slight tweak. I shouldn't say slight. It's an important tweak to how I look at exponential moving averages. You'll notice they turn on and off, but if you've got a 13 or 21 or even 200 exponential on your chart, you'll see it's plotting where those dots are. So I think there's some downward pressure here. So, just in a general answer, I'll track ES and then choose your own adventure to wherever it is you want to take that analysis. By the way, it doesn't have to be limited to SPY or even SPX. You can start thinking about the heavily weighted sectors and the heavily weighted stocks within that index as well, which is for me what I'll start to think about. What are the implications for outperformance within that index? So that choose your own adventure can really splinter off into a lot of very effective, productive directions. Thanks for the question, Warwick. All right, next up, Serge, good morning. How do I form a trade plan incorporating my strategies? So Serge, I think the first rule, or the first rule, there's no rules. I think the first thing you can do is head on over to Countdown Trader, because what this will allow you to do, and I'm sure I'm typing this right, you never know where you'll end up on the interweb when you misspell a URL. It's kind of horrifying, actually. There we go. So head on over to countdowntrader.com. Get the indicators first. So scroll down to the bottom, and then what I would recommend you do is click if you have Thinkorswim. Most of our community does, so I should not presume, but click on this link, and all three of my indicators will be in the drop box that you land on when you click on either one of these Thinkorswim hyperlinks. So get those indicators on your charts. If you're on TradingView, as I am right now, click on the indicators button, tab, icon, whatever, and type in simpler, and you'll see my Darvas 2.0, my grab candles, and the propulsion are unlocked. So get those on your chart. So now we're looking at the same type of analysis, right? So next comes the trading plan. Now, if you're going to think about building a trading plan off what I do, you know that I'm all about outperformance, prioritizing trends first, and then we can start to look at non-trending markets. So I would say that's where you want to start. And then, Serge, then if you want, and everybody, when you want to sort of start piecing it together and seeing how these indicators and how that outperformance priority has been playing out this year, even at the end of last year into this year, which has been kind of bumpy. Join me on March 9. I'm going to go through the good and bad with these indicators, what I've been doing, and that'll be a webinar on March the 9th. I don't know when we'll have the link out, but you'll get the email. I'll let you know here on Charts and Coffee. So, play around with them, get visually used to those indicators on your screen, and then we'll start tying it together on the 9th. All right. So thank you for the question. TT, I am doing well. What about Berkshire? I don't trade Berkshire. I don't mind to track it. I own it. It's a hodl, right? I think Berkshire Hathaway shareholders were maybe the first diamond hands. We just hodl. In Warren we trust, and in Charlie too. So this, however, as it applies to the S&P, the Dow, and the XLF. Now, XLF is heavily weighted within those two indices, and this is the number one weighted stock within the XLF ETF. JP Morgan, by the way, is number 2. So, when I get a dip in Berkshire, usually on a weekly. So when folks ask, Rag, do you share your longer term portfolio construction, sector rotation analysis? What are those larger glacially paced macro rate of change type factors that affect the way in which you build your long book, your long book of trades? And is my sound breaking up? Hang on one sec. Let me try something here. Sorry about that, gang. Let me see if this helps. Okay. That may help, hopefully. Okay. So when we're looking at the longer term, so for me, Berkshire, and I know this is hilarious, but I'll throw Bitcoin in there too. Talk about two things on the opposite, ends of the spectrum. But I'll pull them up in weekly timeframes and use many of the same tools to understand the trends and where I want to be a buyer. So Berkshire, weekly dips, weekly time frame dips. All right, weekly time frame dips. And you'll see that since end of 2020, right? And then going into 2021, I've only been able to buy 3 times, right? And I won't always buy in a weekly dip, but that is part of the overall approach. Okay, so hang on one sec here. All right. Next up is Berkshire. And thanks for asking the question about Berkshire, because the neat thing about that is it allows us to start talking about the fact that us as traders, there's really 3 baskets or 3 compartments, if you will, that are oftentimes relevant to our world. Oh, my lighting is kind of low. Okay, hang on. Let's see if this helps. All right, how's that? I felt I was in war room mode today, I think. All right, so we should be good. Okay, so um, yeah, so what I love about Berkshire, what it brings up is we have sort of this day trading sort of time frame, time horizon. We have our swing trading time frame, time horizon, and we also have our position trading or even sort of our investing sort of time frame, time horizon. And when you think about it in that way, you realize that as us as traders and having the charts at our disposal, we can manage multiple time horizons with the same tools if they're universal and robust. And that means they work on everything and they work well, which really I think should be one of the first things one of the first litmus tests we make any of our indicators have to meet, which is this just curve fit to a specific time frame or symbol, or can I use this in anything? And the can I use this in anything was definitely impressed upon me early on in my personal indicator development. So yeah, thanks for the question on Berkshire and that longer term time frame confirmation conversation and how I confirm opportunities. It's definitely still a trend, TT. And by the way, I'm pretty sure we're going to touch on this on March 9 too, because that's something that we're inching closer to. Because this year, especially if we get the kind of volatility that we've already seen reveal itself and the adjustments the Federal Reserve is making to monetary policy, this is going to be the first time in probably about 18 months that I'm going to start to reshuffle my portfolio. So we're going to start talking about longer term time horizons. We'll definitely touch on that on the 9th. I think Trish does have that in the works for that presentation. Very excited to talk about that. Okay, next up is what do I think of Nike? Christian, we have a short setup in Nike that I posted. And so that was an alert. And I mentioned that because that is a trade that we are looking at March 18, 140. I'm looking at my Sector Secrets alerts window right now. March 18, 145 puts. We alerted that on the 16th at about 10:30 a.m. Eastern. So it's on the radar. It's something I want to take advantage of. Now, SMH, I'm not super keen on. It's still very choppy. It's trying to organize into a downtrend. But what I would highly recommend is crack open this ETF. Take a look at the individual holdings within it. And I have a bearish bias, but we're still hovering just above that 200 propulsion, that 200 EMA. So I'd like to find things south of the 200 that have that red over red, bearish Momo, bearish trend structure. So SMH, not so much, but I do believe there are some names within it that are making a lot of sense. Upwork, hey, short the rip. That's an easy one. Red over red, bearish structure, a sea of red grab candles. Love that to the downside. And ditto Twilio. Yeah, absolutely. Ditto Twilio. Short the rip. Yeah. So if you're taking advantage of the overall bearishness, especially on those last two, actually all of them, Nike, all the stocks in your list, Nike, Upwork, Twilio, and then SMH. Let's go find a boat within that tide. But I like very much what you're looking at, especially if you've got that bearish directional bias. Love it. Love it. Very nice. So next up is, what is my target? Hey there, Tracy. What is my target on our puts Yep, and our IWM. So kind of alluding to the question earlier about looking at SPY or SPX, but using the ES. Same thing will go for IWM. I'll look at the RTY. I'll look at the IWM. We're still, Tracy, still sort of in position building mode. We're still very much sorting out where the resistance is going to be and building that long put position. We're still in that entry zone. So as far as targets go, and I'm not sure that I'm going to, we can always put in an optional, but the first target for IWM continues to be 197.20. 197.20. So we have a little ways to go. The only other level that we might think about being a little bit more aggressive about is around 200. I might put in an optional target for everyone to at very least, move to a break even stop, and or maybe scale out of half the position. Okay, so thank you for the question. All right, Microsoft. Is Microsoft a solid bearish play? So Microsoft, we think about boats and tide, lots of boats, QQQ, SPY, XLK. And so we want to compare Microsoft to other stocks within those tides. We want to compare Microsoft, the boat, to those other tides. And the thing that I'd say is Microsoft is hanging on by a thread here is that 200. Is absolutely that 200. We've got earnings in the rearview mirror. That's what these lines are for. There's earnings. Count off 2 weeks. That's the window that I will typically avoid making any major trading decisions in front of earnings, especially as the implied volatility continues to increase, favoring options sellers over options buyers like myself. So now, yeah, I would say while it's still struggling to hold that bearish trend, I would say short the rip is going to work here. Just be a little bit more conservative about it. But yes, I do like the short the rip conversation. But then again, we're looking to short the rip in QQQ. In fact, we have, right? If you are in the futures or options room, that candle right there last Wednesday was when we bought puts in QQQ. So as it rallied up into the wave, that is our pitch, right? Right. Exactly where I like that pitch to sail over the plate. And that's what we will continue to look to build shorts. And that's also, the follow through to the downside from that. So if I'm bearish Qs, if I'm bearish XLK, I'm totally fine with very likely the follow through on Microsoft. All right. So next up, Mike asks, what is the max volatility or volume from high to low for ES to be used the clearing range? Oh, the maximum volatility? I won't say there's a max volatility, but thanks for the question on historical volatility. It's something unique to what I do, and I think a lot of people may not know. So thanks, Mike. So yeah, what I would say, let me refresh this, is I would be cautious, right? I would be very, very cautious if the volatility for the S&P and every single stock, ETF, futures contract has this. We're outside of the norm if we clear, I'd say 28 to 30 points. So if we're beyond 28 to 30 on ES between really 9 and 10 a.m. Eastern, and actually if we're below 17, heads up, because one is quite high in terms of historical volatility and the other is quite low. So keep an eye on that. So I hope that helps. All right. Okay, gang. And just like that, we are out of time. So thanks so much as always, gang, for joining us for Charts and Coffee. I've got a new mug. The wolf, got the howling wolf, lone wolf. So I do have a great collection of mugs. I do love my mugs. All right, gang. So as always, thank you. I will see you all tomorrow. Same time, same station. In the meanwhile, be good to each other. Keep an eye on that economic calendar. We do have Bullard coming up at 11. So keep your Dramamine handy. See you tomorrow.